right, welcome out to today's advisory report. It is June 16th, 2026. Our gauges remain favorable and bullish across all fronts. A decent day today, even though a down day, considering how much the market was up yesterday. I would say that it's quite constructive. Let's go ahead over to a couple charts. Let's look at the intermediate trend to begin with. This is the S&P 500 on this green red line plotted against the 30-week moving average. That's looking at the price closing on Friday for the past 30 weeks. We found that over time, when the market is above the 30-week moving average, it pays to be a bullish bias. And when the price is below the 30-week moving average, we should be bearish. And so looking back here, the 2022 bear market contained mainly by being under the 30-week moving average. When price didn't move back above the 30-week, it was time to get bullish. And you can see what's happened since. And then there's some other times during COVID, that same period of time. Here was the tariff issue that we had at the beginning of 2025. Here's the Iran strike. So we remain bullish in this moment right now. Let's go ahead and look at the short-term trend. The short-term trend is lining up with the intermediate trend right now. So it's an all go for us over here at Peak Horizons Capital. Here was that nice gap up on price yesterday on peace talks, and then a very constructive day, closing a little bit lower than yesterday's close, but that's okay. We'll just see if this can create a range. That'll be quite constructive. The 20-day can pull a little bit closer, and we'll see if we're ready to make another leg forward. We don't know if that's going to happen today, tomorrow, next week, or whatever, or whenever. We are just going to pay attention to price day in and day out and make our decisions based off of that. Let's go on over to Market Lens. Let's check out some charts and check out some of the positions that we have in our ultra aggressive account. I did close out XLK today. This is the tech ETF. We got some good gains on it, and we closed it out right about in this area. As you can see, it sold off the rest of the day. So a good sell there. And we also closed out a very small position that we had left in Twilio. This one worked out very well for us also, as we bought right here and were able to take advantage of an almost full 19% day. Sold some into the strength, kept a little piece, and got rid of the rest that we bought back at break even. So the positions that we held inside, other than the S&P 500, is CrowdStrike. CrowdStrike looking very constructive, moving sideways. We'll look to see if that wants to turn back up. D-Dog down a bit, but closed in the middle of its range, finding support still at the 20-day. So we'll hold on to that until we break below this area. Doc in, another amazing move. We've been kind of playing it during this whole period of time. Even though a down day today, still very constructive. We'll see if that wants to continue forward. I mean, just looking at this, from March, price of 52 to 174, a 300% return. So we're looking to see if that wants to make a little turn up. A little bit down on MU today, just closing that gap after being up close to 10%-ish yesterday. So you think about a 5% pullback after being up 10%, which, by the way, we took some profit here. So this is a reduced position, and we'll see if this wants to turn back around and maybe reload on a turn back up. And then MRVL, a little bit disappointing, I would say. After a huge day yesterday, we took some profits, kept some, and now we're right back down, almost giving back everything that it got yesterday. So we'll see if this wants to consolidate a little bit more and then turn back up. We're not at a spot where we're ready to throw it to the curb and sell out of our position. We'll see kind of what happens there. That's what I got for you today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.